Hello, everyone. Welcome to the Wall Street for Main Street podcast special. My name is Mo Dawood, along with John Manfreda. Today's special guest is Jimmy Morrison, the director of The Bubble, which is based on the book Meltdown. Jimmy, thank you for coming on.
Yeah, thank you very much. I'm happy to be here.
All right, that's great. Recently you just attended Freedom Fest, and I was actually wondering, uh, it's normally known as mostly libertarian, but there are people that are objectivist like Yarn Brook that go. There are anarcho-capitalist libertarian wings. There's limited government, constitutional libertarian wings via Ron Paul and Steve Forbes, who's I would say more conservative than libertarian, even though he has libertarian leanings, also goes there. So I was wondering, were there some robust debates, and what were your favorite highlights and panels, and how did the film do in the showing there?
Yeah, Freedom Fest is great. Mark Skousen puts it on in Las Vegas every year, and I've had the pleasure of attending the past 2 years. I was pretty busy this year with promoting the film and working the entire time, so I didn't get to go to as many panels as I would like. But the cool thing about Freedom Fest is you do have you have everybody there is pretty free market, but you do have a diversity of opinions about how free market they go. You have Friedmanites there. You have anarcho-capitalists. There's lots of interesting debates between these people, obviously. You have the Cato Institute there, Reason. You have all these diverse ideas. So I really enjoy it because there's too much division within libertarians, and I'm excited about the idea of getting them all together for a weekend to discuss the issues.
Yeah, great. I heard great things about the Freedom Fest. We weren't able to attend, unfortunately, but we heard about the great guests and the discussions and the idea of libertarian and free market is getting bigger and bigger and more popular every day in this country, which is a good thing, because it's these kind of thinking that will help us uh, prosper in the long term. Now, let's shift gears to the film, The Bubble. Uh, why don't you give our audience a quick background of the documentary? It seems like people are comparing this film to Inside Job, but the problem I had with Inside Job, it was a great documentary. They identified the problem real well, but it had a progressive slang in it because it seems like the solution is more regulation and more government. But your film is Austrian free market um, thinking, more advocacy in the free market and Austrian economics. So why don't you give our audience a quick background on the documentary?
Yeah, well, about 2 years ago, I guess, was when I first started working on the project, and the idea came around that this documentary had come out. It was pretty big. It won an Oscar for Best Documentary, but they didn't actually interview the people who predicted the crisis. They were just giving talking points. Now, I will say, I do think Inside Job was a great film. I just don't think they got as deep into the issues as they needed to go, and because they didn't get as far to the sources of the problems, like you said, they had the wrong solutions because they didn't see the whole picture. So yeah, our film is meant to be a response to it in a sense. But that being said, we do cover a lot more issues than just what Inside Job covers. We go through the last 100 years and talk about the Great Depression, the Depression in 1920. We talk about the stagflation in the 1970s, and the audience really learns how these bubbles have happened in the past, what our responses have been, and what the effects of those different responses were. And I mean, people think we haven't tried raising taxes before, but we have. It was called the Great Depression.
And yeah, I completely agree with it. And another thing is also in the late 70s, they were they tried to basically wean us off foreign imported oil. One thing they did was they passed windfall profit taxes on oil companies that actually increased foreign oil imports. So we have tried raising taxes numerous times, not
Right.
just. And I was actually wondering, in your film, the first thing I read about was Greenspan put and the Bernanke put, and I was wondering, just for those who are unfamiliar with it, can you briefly explain what those are?
Yeah, well, Alan Greenspan became the head of the Federal Reserve Chairman at the end of the 80s. We had the savings and loans crisis, which was another bank crisis that we've had since the Federal Reserve was created. Alan Greenspan was ready to step in and bail out any large entities that he thought threatened the economy or maybe hurt his friends on Wall Street. I don't know what his decision-making process was, but the result was that he bailed out a lot of bad firms that should have gone bankrupt. Their resources should have gone to other people who may have had better luck with them, but they kept the resources with the people who had failed and not just failed, but in some cases committed fraud. So he did this throughout the 90s, throughout the last decade. He bailed out LTCM, he bailed out the Mexican peso. You might wonder why we would bail out another country's currency. Well, the reason is because the people that lobby the government held a lot of that currency. They couldn't be they didn't want to face the losses, so they lobbied the government to bail them out. So what happens when you bail people out and you take away the risk that the market has is people will be as risky as they want because they have no downside. They have no reason not to just go after whatever profits and get the quick buck. If they do well, they'll do well. If they don't do well, the government will step in. So that's something that Greenspan kind of revolutionized in this country, and now Ben Bernanke has taken it to the next level. So there's a Bernanke put as well.
Yeah, I don't think people understand why the banks speculate and gamble so much on the client's money because they know the government will bail them out. So, I mean, well, so nothing to lose for them, so they're just going to keep gambling. And that's just part an inside job that they didn't cover very well is the Federal Reserve and their role in the financial crisis. And I think your film will do a very good job covering the role of the central banks in the financial crisis. Now, another question I want to ask you is, are you worried about the attitude that people have toward capitalism in this country? It seems like more and more people are against free market capitalism since the 2008 financial crisis, even though we never actually had free market in this country for several decades.
Yeah, I'm very concerned about it. That was a big inspiration for the film. Right now, I would say the education of the public is clearly not where it needs to be. The mainstream is not offering solutions that even differ between the two parties. The Republicans and Democrats are doing the exact same things. If you look at Obama's policies as far as the banks, as far as Wall Street and the housing crisis, how he responds to this, they're exactly the same as Bush. I mean, Bush nationalized the banks. This isn't a free market versus socialism example. This is a socialism versus socialism example. And I think it's really interesting that the same thing happened during the Great Depression. We had a Republican who resorted to socialist policies, and then we had a Democrat that resorted to socialist policies. But over the last 100 years, the mindset of the people has changed because people look back at it and they say, "Oh, he was a Republican. He must have been free market. It must have been the free market that caused it, and then the Democrat was just cleaning up the mess." But the fact is, FDR was president for 13 years before the Depression was over. So I don't know if Obama will be reelected or not, but how many years can you really continue to say it's Bush's fault, especially when his policies are exactly the same as what Bush was doing?
Yeah, that's an excellent point, and I think he will say it's Bush's fault as long as he can get away with it. So that is my opinion about how long he can say it.
Right.
But your film also covers another depression, the 1920 depression. I actually wrote an article for Wall Street for Main Street on this, and if you look at it, the policies were the exact opposite of the Hoover slash Roosevelt. And of course, it ended practically the next year, or I don't know if it's 1 or 2 years. But can you briefly explain what you're going to talk about in the film about the 1920 Depression?
Yeah, absolutely. It's something where right now people say that if we cut, even a couple $1 billion out of our multi-trillion-dollar budget in the government, that the world will end. We'll have skyrocketing unemployment. Everything will be terrible. This recession will go on forever. But if you look at 1920, the federal government actually cut spending in half in just a couple years. Like they cut it in half, not just the increase in spending. So we were able to pay off $2.3 billion off of our national debt in the year 1921. So, like you said, the Depression started in 1920. It was over in about a year and a half. Yes, there were people that suffered, but the question is whether private charity can deal with those shortfalls, or if the government is going to have a more effective response. And if you look at the record from the Great Depression, and if you look at this recession, I think it's clear that the government is not functioning the way that people think it could.
I'd like to follow up on what you just said. It's for people that don't understand the dynamic of free market. How is it that we're able to get out of the Depression more quickly in the 1920s versus the 1930s? What did they do so differently that they didn't do in 1930s and today?
Well, the Austrian school of economics differs from most mainstream schools. The Keynesians and the monetarists both believe that what happened before 1920 doesn't matter. Really, it's just about what happened in 1920, or in the case of the Great Depression, it's just what happened in 1929 when the stock market crashed. We don't need to look at the 20s. But if you look at the 20s, we increased the money supply by about 50%. So we printed a bunch of money that wasn't backed by anything like gold. And Austrians believe that when you do this, it creates malinvestments in the economy. It lowers interest rates, which we go through a lot better in the film, because you can use cartoons and animations and stuff to get your ideas across. But so I won't go too far into detail with it. But when you create money out of thin air, it lowers interest rates, and it distorts the decisions that people are going to make. If you can go to the store and buy something, and you have 0% interest rates for 18 months, you're probably not going to save up the money over the next 18 months. You're just going to buy it now. So these distortions are able to be sustained for a while, but once people start to realize that there's more money in the economy, then the prices start to go up, and once the money supply is not able to keep increasing at the same amount or at the same speed, then those firms that relied on just creating money out of thin air fail. And so the reason that we're able to have a short depression in 1920, but a long depression in 29 and a long depression now, is because the government is doing everything they can to stop those malinvestments from readjusting. So there are too many people in houses, just like there are I don't mean in houses, I mean there are too many people owning houses. Just like in the 90s, there were too many people in the stock market. In the 20s, there were too many people in radio. These are bubbles that are created by the creation of this money. So in 1920, when the government got out of the way, those malinvestments, people were able to adjust out of those malinvestments and go back into a sustainable pattern where it's based on the decisions that individuals make rather than arbitrary controls by the government.
I just wanted to say, for those who aren't Austrian, malinvestment is mainly an Austrian term, and it means just bad investments or bad business plans, and they have to let fail. The reason I say this is because my dad actually asked me a couple of days ago what malinvestment was. So.
Oh, great. Yeah, think about a house. If the government lowers the interest rate artificially, that's going to affect you if you're looking at buying a house. If you have to pay interest over the next 30 years and they cut the amount of interest you're going to have to pay in half, you're a lot more likely to buy a house. On the other side of that, that it supports housing. So I think it's pretty clear. And if you look at the empirical data as far as when they lowered interest rates and as interest rates started to come back up, it pretty much correlates right with the crash.
Excellent point. And I want to shift. Well, also I want to mention that Warren Hardy advocated deflation as well. So that increases the standard of living and incentivized people to start saving, which created more capital, and that led to the roaring 1920s.
Right, absolutely.
Yep. I want to shift gears to a couple of recent events that happened in this country, and that's the bankruptcy of MF Global and PFG Best. How do we solve some of the problems that's going on in this financial sector? It's a common question asked by people. How do we get the banks and broker firms to stop speculating with the client's money using free market Austrian economics? I hear people that want to have the Glass-Steagall Act back into law, and they think that will help solve all our problems. What do you think?
Yeah, I think if you really look at Glass-Steagall, one part of it had to do with the financial crisis. The other part, not so much. The other part is what most people look at. What they look at is the part that was repealed. This allowed commercial and investment banks to be owned by one parent company. But there were lots of commercial banks that failed, and there were lots of investment banks that failed that weren't owned by the same entity. So I really don't think this repeal had anything to do with the crisis. The reason they failed was because housing prices got boosted up artificially, and then they had to come back crashing back to reality. When they did, the mortgage-backed securities that held them, the prices of those went plummeting. So I really think people are missing the point on Glass-Steagall. The other side of Glass-Steagall was part of it didn't get repealed, and the part that didn't get repealed was the FDIC. The government literally guarantees up to $250,000 of deposits that you put in a bank. So if you were to actually be concerned about what your bank was doing and whether or not you could put your money in the bank and get it out the next day, I think we'd have a far better system than we have now. Instead, the government guarantees those deposits so the bank can go take your money and lend it out for 30 years to someone that's buying a house. And then when you come in any time over the next 30 years, your money's gone. So it's something that is, I think, is very unstable. And if we got rid of the FDIC, I think that would go a long way toward stopping speculation that people are concerned about.
All right, that's a good idea and good comments, analysis. And I was also wondering, I was looking at upcoming problems in your documentary, and I was wondering, are you going to talk about the potential of the U.S. losing world reserve currency status? Because I was looking at China and Russia in the past year or two. China and Russia, they're now making deals where they're wanting to settle in their own currencies. Japan wants to make new trade deals, outside of dollar-denominated settlements. And you also see Brazil. You even see one of our allies, South Korea, wanting to get out of dollars. So that's when you know it's really bad. When one of your allies doesn't, two of them, Japan actually, don't want to settle in dollars. So I was wondering, how much do you talk about this in the film, or if you do? So.
Yeah, absolutely. And actually, I want to point out, if you go to www.thebubblefilm.com, you can see all or almost all of the interviews that we've done with the economists and entrepreneurs who predicted the crisis. We posted the raw footage of those interviews up there, so everybody can watch hours and hours of video and learn a lot about what happened even before the film comes out. So you can even see each individual person in the film, their predictions for the future. But I guess the thing about we do talk about the world reserve currency, and I don't want you to quote me on this number, but I want to say that pretty recently foreign central banks held about 70% of their reserves in U.S. dollars. I believe that's down to about 60% now. So it's something that's already happening. I think Whether it happens in a year, 2 years, I don't know, but it's something that's inevitable in my opinion, because we're printing so much money that I mean the monetary base is basically quadrupled, which is what we is basically what our reserves are. So when that money hits the economy and price inflation starts really taking off compared to what it even is now, I just can't see other countries wanting to hold our dollars as they lose value. One point that we make is that when the Federal Reserve was created in 1913, the purchasing power of the dollar since then has gone from, if you set 1913 as $1, it's literally less than a penny. So you talk to your grandparents and they say, I can't believe how expensive things are now. But if you go 100 years ago and kids then talk to their grandparents, they said, I can't believe how cheap things are now. Like we're progressing as a society. There are more products out there. You can afford to have a better life than I could. And with the inflation that we have now, I just don't see that happening for the next couple of decades.
Excellent point. I want to go back a little bit and talk about regulation in this country and people's attitude towards, regulation and the regulators. I find it funny that every time we have a crisis, people just demand more regulation when there's already enough regulation to prosecute these bankers for the crime they've done right now. So don't you find that funny?
Yeah, absolutely. I mean, look, I believe fraud is something you can't do. You can't make a contract with somebody and then break that. You can't lie to them about what the contract really is about. I do believe there were cases where people committed fraud. If you look at the savings and loan crisis in the 80s, a lot of people went to jail. If you look at this crisis, nobody went to jail. So I do think that fraud is something that needs to be enforced, but we didn't deregulate fraud. Fraud has been illegal this entire time. But if you look at the regulations that existed, all the regulations were pushing people toward home ownership. We had a tax code that encouraged people to be homeowners, which meant that if you were a renter, basically you had to pay higher taxes than somebody that owned a home because they were somehow better in our government's eyes. I think this is just ridiculous. The government has no business regulating or distorting the economy towards certain sectors that they prefer or think they are better. I believe there's an education bubble right now, and this is another example of where the government says, hey, everybody has to go to college, everybody has to have a degree. It's the most important thing. It doesn't matter what it costs. We're going to guarantee the loans. It's something that both parties have supported. Mitt Romney and Barack Obama just had kind of a little argument over the past few weeks about the interest rate guarantees where they're at 3%. They didn't disagree on whether or not they should artificially lower the interest rates. The only thing they disagreed on is where they should allocate some resources away from. So there's really not a solution within the past couple of presidential elections, the two main parties. Now, that being said, I consider myself a Republican. I believe that the Republican Party, although it has a lot of issues, I believe there is a strong libertarian base in the party. So my hope is that we can educate people and they'll shift the direction of party the way that Ron Paul has.
Excellent point. And the education bubble is part of the government and debt bubble, the big bubble that is currently going on, not in this country, but in countries all around the world, where they're just printing money recklessly and diminishing the value of their currencies so they can inflate their debt and pay back in cheaper dollars or euros or whatever currency they might be using. And the consequence is very severe, especially on the middle class, because their standard of living goes down unless, they invest in gold and silver to protect themselves.
Yeah, absolutely. If you look at the countries that have had high inflation, thanks to their governments creating so much money, they've destroyed the middle class. And I really think since we went off the gold standard 40 years ago, you can just look at the charts. Everything was kind of going along, and then the last 40 years, standard of living is not going up the way people think it is. And more importantly, the middle class is shrinking, and manufacturing is collapsing because there's no savings to support these businesses.
Yeah, exactly. And I have one final question, and that is, you've traveled a lot to do this film, and I just want to ask you, do you believe people are more prepared for the next bubble since the 2008 financial crisis? I mean, I believe you talked to many people during your production of this film, because there's a lot of lack of honest information and news coming from the mainstream media and the government and, economists and the politicians. So do you believe people are more prepared now compared to 2008?
Yeah, I would say the general public is not, but I do believe that far more people have predicted this crisis than the last one. It was a lot more select than the Austrian School of Economics has exploded in the last few years. So I do think there are a lot more people who understand what's coming, but that being said, it's a very small minority of the population.
Excellent point. Excellent point. Now, just to final wrap up here, why don't you tell people how they can find more information about your film and discuss the people that are in the film? I know you have a lot of big name people in these films that we all recognize on CNBC or Bloomberg.
Yeah, you mentioned I've driven all over the country. I actually interviewed 16 people. I've driven over 26,000 miles. I've gotten to meet some really incredible people, and it's just been a huge blessing. But the film, you can check it out at thebubblefilm.com. You can watch the trailer there, which we premiered at Freedom Fest in front of over 1,300 people. And at Freedom Fest, we actually had a panel with a few of the members of the cast. David Tice was there. He's a hedge fund manager in Dallas. And Doug Casey was there from Casey Research. He was a best-selling author in the 70s and has been very accurate in his predictions over the last 40 years. Gene Epstein was also on the panel. He's the economics editor at Barron's. And then Peter Schiff from Euro Pacific Capital, who is a very big name that predicted the crisis. On our website, you can also see interviews with Ron Paul, Jim Rogers, Jim Grant, Mark Faber, Joseph Salerno, Robert Murphy, Mark Thornton, Roger Garrison, Jeff Herbener, Patrick Barron, and Peter Wallison at AEI. We really wanted to just document what these people believed, because really, I mean, it's been years since the crisis happened, and some of these people predicted it a decade ago, and once they were proven right, nobody went to them. Nobody sat down and asked them, why did this happen? What's next? What should we be doing? So I think the film is something that the general layman will be able to understand. Long term, we're planning on also releasing it as a mini series where it'll be 4-hour-long episodes where we can get a little more in depth into the topics and expand on things a little bit. But yeah, I just encourage people to check us out at our website, thebubblefilm.com, or facebook.com/thebubblefilm, or twitter.com/thebubblefilm.
Well, Jimmy Morrison, thank you for coming on Wall Street for Main Street podcast. We hope you can come back on in the future.
Well, hey, I really appreciate you guys having me on. I'd love to come back anytime, and I've been following you guys for a year and a half now, so it's good to catch up and chat.
Thank you. And for people that want to find out more about Wall Street for Main Street, be sure to check out our website, wallstreetformainstreet.com. Posts and articles for you guys to check out, and you also can subscribe to our website for updates. And also, we've also put out an oil report that has our opinion on why we think the oil and gas price will go up in the long term, and also we included 17 oil stocks that we think will perform very well in the long term. And be sure to check that out also on our Wall Street for Main Street website. or you can go to petroprofit report.com.